Coming to you live from downtown Detroit, this is Benzinga's PreMarket Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day.
I'm on mute. Sorry, folks. I did the old mute trick. Good morning. Welcome to this Monday edition of PreMarket Prep. Spencer Israel, Joel Elconin, Dennis Dick. Triple header of good news this morning. New York saw a daily decline in deaths. Italy posted its lowest daily death toll in 2.5 weeks. Spain's numbers fell for a third straight day. So a lot of good news this morning, and we are up as a result. I'll throw it to Joel here before I preview the show. We're going to talk about the rally. We're going to talk about Buffett reducing his stake in a couple of airlines late on Friday. We'll talk about, or at least the news came out Friday. We'll talk about the crazy move in oil here, with the move on Friday and the follow-through move today. Oil volatility is not getting lower here. And our guest today is Jonathan Corpina, Senior Managing Partner at Meridian Equity Partners. He will join the show at 8:35. In the meantime, Joel here, what's the word here in the overnight pre-market session?
Here we are on a synthetic Tuesday, folks. We are up 87.50 handles, 25.70 in a quarter. Caught a bid right off that 6 p.m. open 85, low 84.75, and I blinked and it was at 25.15. Follow through rally through the pair of highs from Thursday and Friday, and we've got all the way to 25.86.75. Now backing off a little bit. Big number still up top, folks, is that high from last week at 26.35.75, and then 26.5. That's your 3-week high. I'll just give you the skinny on crude, and then we'll discuss it. Down 98 cents at 27.36. Gold breaking out this morning above 1650, up 26.80 at 16.72.5. Silver joining the party too, nearing $15. That's up 38.6 cents at 14.88. And Bitcoin's joining in the rally too, up over 7,000. These are the futures, up $395 at 7,195. So when's the last time we had a solidly green Monday?
This solidly green, it's been a while. Let's go back. I don't know for the Mondays, but it's been a while. We've probably been at least 2 weeks since we've had a day that we're up 900 Dow points. At least, futures are implied 764 up here right now. It's been a while. I mean, this, once you saw the NYSE numbers, you kind of knew this was going to happen. I tweeted this out at 4 o'clock right before the futures opened. And I was like, is this going to be a flattening the curve rally today? Because it probably sets up to be. The NYSE numbers were good. Spencer, talk about them.
Yeah, so the question is now, and Governor Cuomo outlined this situation last night or yesterday. Is this a blip? Is this a blip or is it not? Because going into the week, the expectations were that this is going to be a brutal week. The president said so. Yeah. Everyone seems to think this is going to be a brutal week. So the blip, the daily decline in deaths in New York over the weekend, as Cuomo said, was it a blip or is
what were the numbers? So give the numbers just in case people aren't following it closely.
Here.
Do you have them in front of you?
Not, I have them somewhere in front of me, but I can't actually find them at the moment. I have so many windows and tabs open. I apologize here. Let me try to track them down.
So day over day, less deaths, day over day, less hospitalizations, I believe. Both good numbers. This had to happen eventually. It had to happen. And this market is trading so much on logic now. I love this market because it's trading as you think it. It should. It's trading off of logic. So you look at the situation and you think, okay, well, it obviously caught me by surprise that those numbers came down. You knew this was going to happen eventually, though, that the death rate's going to start to fall. I mean, why are we social distancing if it's not going to eventually show Any
All right,
real positive?
I found them. I found them on my.
Give me the
I found them
numbers.
on my tab. Okay, New York reported 594 new coronavirus deaths on Sunday. On Saturday, they reported 630 deaths.
Which was
So,
down from Friday. What was Friday's numbers? It was a lot higher than that, wasn't it?
I didn't write that down. Sorry.
Okay.
I don't know. Friday's
Okay. In
numbers.
any regard, here the death rate appears to be at least slowing. The acceleration appears to be slowing. Cases in New York, the numbers were good. When I was seeing those numbers come out, I thought it too. I was like, we're probably going to rally significantly on this because everybody thinks, the apex is 3 or 4 weeks away. And it's like, oh, boom, maybe we're closer than we think to the apex, which is really good news for the market. I mean, this is the kind of market, and Muhammad Al-Arian was just on CNBC, completely agree with him. This is the kind of rally that is sustainable because this is what the problem is. The problem is obviously health. And this is good news on the health front. The first good news, like every time we've rallied before, it's been on BS from the Fed. This is actually on what we've been doing, the social distancing. It's showing that it is starting to work, at least in New York City. We're going to have ugly numbers elsewhere because the social distancing efforts haven't been as good as they have been in New York, and some of them started a lot later. So you are going to still see some ugly numbers coming, lots of bad news still coming. But with that being said, it's starting to bear fruit. The social distancing efforts are starting to bear fruit. And that's what we are seeing here this morning. So this, don't kid yourself, is a complete rally on the New York City numbers. Oil got killed. It was down 10% at one point in time. And you've got, when we opened at 6 o'clock, oil was down 10%. On any other given day, the S&P futures would get killed. But you had the S&P futures open up 30. And people were, scratching their head. And I'm like, well, it's not surprising because those New York City numbers were good. And it shows that we might be closer to the apex than we think, which is good news. With that being said, we are far from out of the woods because even if we get the death rate slowing, we're still doing the whole social distancing thing. So what happens when we start to come back out? I know Matt Kolb was tweeting on the weekend, like what happens when, if we just reopen everything in 6 weeks and we start to go back out and do our stuff? Does COVID start coming back? Do we have it, down enough that it's not going to pick up the strength again, to have, a lot of new cases show up? I mean, there's so many different questions to be answered still on this, and I don't think anybody has these answers for these. But what we do have is that social distancing is at least starting to work. It appears, at least, unless it's a blip, it appears in New York City. You hope the numbers are going to be good again. But eventually, this had to happen. If you're social distancing and nobody's going around and, you're limiting the contact with each other, eventually, it's not going to spread as rapidly. That's the whole idea. So it's working, and that's good news for the market.
Right.
Yeah, Detroit, we're getting hit pretty hard here. So New Orleans, they had the Mardi Gras. Detroit, we exposure with people from the auto industry. So, things are ramping up here. Other places, Lisa talked to a friend of hers in Arizona, hasn't hit there, that in a big wave yet. So it's definitely good news here.
Good news.
And the market's responding to it.
Good news. I'm happy we got some good news.
Gosh darn it. I mean,
I wish it would have happened on a different day because I actually came in a little bit short overnight. And then I was like, at 4 o'clock on Sunday, I was like, I'm in trouble on those short positions. So, but that's my day trading portfolio. And obviously, I'm still sitting with a ton of cash in my long-term investment portfolio, which I eventually want to put to work. I'm still not confident enough yet, but this makes me feel more confident. Like on pullbacks now, maybe I start to nibble again. I'm not coming in here and chasing us when we're up 744 Dow points. But on pullbacks, maybe I'm interested here again. Spinner making a good point in the chat as well. South Korea numbers, Italy numbers, Spain numbers, Germany numbers are all getting better. Italy had, I believe, over the weekend, one of their lowest death rates.
2.5 weeks.
In 2.5 weeks.
Yeah.
So it's not just New York City, it's Italy as well. So social distancing working again. Bravo to all these countries, that are doing the social distancing because it's showing up in the numbers now that it is starting to work. And that's really been the only way. Without a cure, without a vaccine, there's nothing else we can really do. So it's starting to work, and that's good news for the market. I'm not surprised we have a significant rally here this morning. I'm somewhat skeptical it's going to hold. I don't know.
Yep.
It could hold because of the healthcare rally. So it has a better chance to hold than if we were up on the Fed here this morning. So, I'm not shorting into this. I'm not actively this is a gift. I'm not actively selling into it. I'm just not chasing. I'm not coming here and buying stocks. Again, I'm going to say the same thing. The stocks that I've been buying Stocks like Microsoft, I bought that last week. Stocks like Qualcomm, I bought that last week. Big tech that is going to be okay through this. Those are the stocks that I want to own. Again, I have a lot of cash to put to work, but I will be picking on tech stocks. I am not going into the airlines. I am not going in, and some of these stocks might get a lift, like Wynn Resorts is up, I think 7% here this morning. That's kind of ground zero, that stuff. I don't think that stuff is, it's going to have the biggest bounces because it's been beat up the most. But when you look in, is it really going to recover all the way back? Like, some of your tech companies, I want to be in safer stuff, because if we turn down, that's the stuff that's going to get hammered again.
Hold up the best. Yep.
Yeah. And if, you're in good stocks, like, I've talked about, tech with cash, like, and you think about even Amazon as well. And obviously Amazon's not going to participate as much in this rally simply because it never sold off as much. But there's lots of good companies that have been holding up fairly well, even when it was starting to get rough. And if you're looking, a lot of them have something in common. A lot of them are tech, for one thing, but a lot of them have a lot of cash component as well, like a big chunk of cash that they could go, if we go into a lockdown for 3, 6, 4, 5, 6 months, some of these other companies can survive. So that's why I'm picking on those companies. Those are the kind of companies I want to go long. On pullbacks, guys, on pullbacks.
Yeah, on pullbacks here. I got a number I'm looking at here that if we break below, then I think we'll get back some of these gains. You guys know how I do my numbers, so I don't need to give it to you. Let's just talk about crude. And did you see that after hours on Friday, Dennis? They jacked that thing to 29.14 and settled it at 29. And then I looked at that IG.com, that weekend indicator thing. They had it trading up another $1.60. They couldn't have been more wrong. Opened at 26.09, went down $1 and then rallied. So, man, now I know why some firms have you on double margin here for the crude oil futures. For crude, I'm keeping an eye on that close from Friday. That was the real close, not the jacked up 5 p.m. close, but the close on Friday was 28.34. That's where everyone was marked. You had nearly a 3-point rally, got to 28.24. And then just quickly, gold's looking good here. Had a bunch of highs at 16.50, and we poked through there. I think the next thing for gold would be to clear 1,700 and settle over 1,700.
Gold has held up for a long time. Throughout this whole thing, GLD, not the gold miners, but GLD has held up well. People were asking why the miners weak, and they've come back a long ways too. But a lot of the cases, when we had that real weakness 3 weeks ago, they were hammering everything with debt. A lot of those miners have a lot of debt. A lot of those gold mines obviously probably aren't even operating. I mean, you think about a place where you could spread it, probably if you're all down in a mine. Maybe they still are, I'm not sure, but I would think operations are somewhat more limited than they were a month ago. So there's lots of considerations with the miners, but gold has held up. The precious metal itself has held up fairly well. So back to the markets, though. I mean, we get a good piece of good news. Was it a blip, Spencer Israel? I mean, that's the big question that is going to be answered here, I guess, today as we see the New York City numbers. If they come out and the numbers are bad again, New York, do they hammer the market down? Or are we starting to get over that, initial hump? Because you got to think, like with all the social distancing, just using logic, with all the social distancing, you got to think that the numbers eventually are going to start to improve. So could we get a couple weeks where we start to show some strength and start to get back up there again? What do you think, Joel?
I think it's all to me. I'm just going technically here because I can't predict, what these numbers are going to be with the death rates and what's going to pop up with cures. We could talk about, Gilead in a second here. I thought, they really tried to crack it Wednesday, Thursday, and Friday of last week. They tried to get it down to that 50% level, and they couldn't do it.
We put a triple bottom in.
Exactly, like triple D. And then, on the upside here, I would love to get out the scalpel and maybe start doing some shorting. But in reality, you had the 3-week high at 26.50. You had last week's high at 26.35.75. That's the line in the sand. And I think that, and right now you're in the middle of that trading range here. So I definitely don't want to be long here, and it might be a little bit early to start the shorts, but that trading range that we established last week, we're calming down. The 9-day average trading range is coming down. Everything is, so we don't have to bust up to 2780, which is the 50% retracement. We don't have to bust down through 2400 and go test the move. And I think everyone's ready for that because, you had 2 or 3 weeks of action. But in reality, the market calms down first before it makes a new move. And we're just in the calming phase. There was a big move last night. And I just think you're going to grind and you're going to grind. And then you're either going to bust out over 2650, do the real 50% retracement, or bust down below 2400 and maybe test that low. But, I might be saying that for 2-3 weeks, 2-3 months, something like that. So I'm just looking at things that, technically and, just trying to follow the levels and not follow my
So I'm going to do the
opinions.
combo. I'm going to use the technicals. I'm going to use the logic because I'll tell you, I've been making most of my money lately just trading on logic here. And this market has been trading very logically for, a while here now. And they do trade on these COVID numbers. And you can kind of anticipate. You say you can't, but you can because we're doing social distancing. So you got to think the numbers are going to have a little bit, problems in some areas. But in Italy, it's probably going to continue to improve, because they're still under full lockdown there. And another country is probably going to improve. It's probably going to continue to slowly improve in New York too. Yes, we're going to have blips. Nothing goes straight up. Nothing goes straight down. But it's got to start bearing fruit. So when you think about that, if the numbers coming aren't that bad and we get a cycle, let's say a couple of weeks where it's not that bad, we could rally substantially. So now I want to do the combo. What is the 50% retracement of the overall move?
For the SPOOs, it's 2780. And
2780, so 278 on the SPY, right?
Yep.
So call it 278, 280. That's up another 200 points from here. Yep. That would be the 50% retracement of the entire move. I think that's doable in the next week or two. I'm bullish short term here. I'm not loading up my investment portfolio. Like I said, I might buy some stuff on pullbacks here because I don't know how we get out of this thing yet. But I think, we're not worrying about so much getting out of it right now. The market's not worried about what is the escape plan. The market just wants to see the numbers improve. So it gives us a glimmer of hope. This market can live on silver linings for a while. And the silver lining here is the numbers are still going to go up. But as long as that rate of increase starts to decline, I think the market could climb a slow wall of worry here. I don't know the escape plan, and that's why I'm not going to go all in on this market, because what happens, we get some bad news, some tigers got the thing in the Bronx. I mean, it's bad if it's going to other species now, but, that's besides the point. The point I'm just trying to make is there is the potential for there to be some good news in the next couple of weeks as the social distancing measures start to bear fruit.
I don't know about you guys, but I've been social distancing from tigers for a very long time.
We stay away from the tigers. We're not going to the zoo anytime soon.
Yeah.
Is there a public zoo to short?
That would be a good question. But here's something else I don't think that you mentioned yet or considered is how bad will it get in other states? Because if you look at the death toll across the U.S.,
yeah,
I mean, it's really not that bad in most areas of the country. It's bad in New York, New Jersey. It's getting bad in Michigan too. But in New Orleans and Louisiana, it's getting bad too. But it's really not most states. I wonder what the median death would be, the total death number would be across the U.S. It would probably be double digits, or maybe low triple digits. I mean, it's not that bad in terms of number of deaths in most areas of the country.
Two reasons for that, I think. I'll address it, then you can address it too, Joel. Two reasons for that. One is geography. So New York is just a bad situation because it's a big metropolis. People are on top of each other.
Right.
Secondly is I think that, a lot of these states and a lot of these bigger cities like Detroit are just a little bit behind. So
sure.
You're going to see, and this is the potential for more bad news if you just want to talk
about that's what I'm getting to.
That's the potential.
How
if Detroit starts to look ugly, if Chicago starts to look ugly, does the market start to decline? Say, well, we have another epicenter. We have more epicenters here.
Right. That's what I'm getting to.
Potential for that too. So it's a very valid point you're making. I hope that the social distancing measures bear fruit all over the place eventually, and maybe we don't get as ugly as New York got because we started to do social distancing, but there is still some places that aren't doing the social distancing very well. And those places might get impacted a little bit. We don't know. I mean, but there is money. Like people say, who cares about these numbers? There's money to be made by predicting the numbers. If you could have known that the COVID numbers were going to get better in NYSE over the weekend, you'd be making a lot of money right now. I obviously didn't know that. I came in even a little bit short. I was mostly hedged, but a little bit short. And it's costing me some money here, and I'm been scrambling all morning trying to work out at the short side. But it's a headline-driven market right now, and technicals work well. You can still use them on where we're going. Like today, you can say, okay, well, we it might not be able to call the direction overnight, the technicals, but it can definitely tell you where you're going. And you got a triple top on SPY up there, 263, 262, 260. So now again, we talked about this range last week. You are still within the trading range. On the low side, say 245 SPY, on the upper side, 262, 263. Maybe we chop around in there for a couple more days, like Joel's saying. It doesn't have to just break out, and maybe it's going to take a good piece of news to break us out one way or another. I don't see, the cloud hanging over the market that, when I was looking last week and you're thinking, what can be the catalyst to give us good news? I did not foresee a potential, NYSE numbers dropping in this weekend and the apex being closer than I thought. So this actual social distancing is bearing fruit a lot quicker than I thought it would, which again is good news. So some good news. We like good news.
Okay. I'll just go. I gave you the technicals. Now I'll just give you the fundamentals. And next quarter's numbers are going to be horrible. There's just
Right.
no doubt about it. So Q2 is toast. All right. Q3, I don't know about. Q4, I don't know about. So if we're going to go based on the numbers and that these companies are going to be releasing, then we got a whole lot of bad numbers coming out. So, I could give you my bullish technical outlook, but my fundamental outlook is, this is such a pervasive thing. Airlines, cruises, auto company. What? 3/4 of our economy is shut down. Restaurants are going out of business. The government handing out checks to people.
A lot of bad news.
There's a lot of bad news, and it's not going to be resolved in the second quarter. Now they can, it's good. The health thing, pandemics just don't go away. They all have a different, time period of, and a lot of them are not less than a year. So, we could get all excited about this news, and I hope it's a trend that's going to continue. But I still think long term, we are so far from being at second inning, third inning.
We're early.
Yeah.
How do we get out of it? Like, that is still the big question, and that's going to be the economic question. And a great point you're making. Numbers, we're coming into earnings season. They're going to be a mess. The numbers themselves for the first quarter might not be that bad because you had probably 2.5 months where it was pretty much business as usual. The last 2 or 3 weeks of March would probably get ugly, so you'll see a weakness. It's that guidance going forward. What are they going to say? Mm-hmm. Now, with that being said, maybe if the expectations are so low, for all of these companies, that if they say anything okay, they might rally. It's we know how the market responds. It responds to expectations. And just like we saw the jobless claims numbers, were horrific, but the market responded well to it. Just like, the jobs number last week. Initially, the market actually tried to rally on it before it started to, show some weakness there, throughout the day. But there is the potential for this market to rally on bad news, even on individual stocks.
We've seen that.
We've seen that. A lot of unknowns. And maybe you just throw it all away. And I know there's a lot of good technical traders out there. Maybe you don't consider any of that and you just trade on the charts. And if you're doing that, you're looking at the S&Ps, you've got your line, you've got your range. Your range is very set. Like we said, 244, 245 on SPY on the buy side and 259 to 262 on the sell side. You may get a shot at that upper end of the range there today. Maybe you take a shot on the short side there. It's all, but the next move is going to be dependent on what the New York City numbers look like again today.
All right, it's 8:27. I want to get to a couple of stocks here. Everything is up this morning with a couple of exceptions. 2 of those being Delta Airlines and Southwest Airlines. Man, poor Warren. He avoided these airlines for how long? And he finally gets in them, and this happens. So
they nail them.
Filings out last week show that Warren Buffett sold 18% of his stake in Delta Airlines and 4% of his stake in Southwest Airlines and SEC filings that went live last week.
Yeah, this came out Friday night. I did trade these headlines. I was able to get short LUV. I had to go down a little bit to get it. I honestly, I think I was one of the first people, if not the first person to short that stock on that headline on Friday night. Again, FIFO problems. I'm first in, first out. I get out too soon, but it tanked. So we are up, obviously, from those lows Friday night because the market is helping it back up. But LUV got down to 27.40 Friday night after, you're talking almost a 10% fall for Southwest Airlines after it got disclosed, and it was right there. You can just go into your Benzinga Pro and you can see them pop in. I was like, oh, this isn't good. Warren Buffett, they're waiting for Warren Buffett to do something good. Now Warren Buffett's selling. So obviously didn't sell all of his stock. And some people were calling me out that I said he sold all his stock. That's not the case. I did not say that. But he's sold a piece of his stock, and people are speculating, okay, why is he selling? Is he selling to do some, different? Is he selling to buy something else? Is he selling to buy, some, or to get under 10% so that he can do something else in these stocks? I think that's all. I take it at face value. I think he's reading, and this is just my thought process, but the way I read these airlines is we don't know what the bailout's going to look like. We do know that they're burning significant cash, and we know Warren Buffett trades on fundamentals. And if you're analyzing these airlines from a fundamental basis, it is much different than if you were analyzing them a month ago. So I think he just lightened up because he's uncomfortable with the position, to be honest. That's my opinion. We know we can't be in Warren Buffett's head, so we don't know exactly why he did it unless he comes out and says it. But I think he just sold to lighten up.
I think we're going to lose some.
Too,
I think we're going to lose some of these airlines. I mean, I think there's.
I think so too. Joe.
Yeah,
I think it's possible.
I'm not going to guess, which one is going to survive. There's going to be consolidation. That's the other thing. When I was like looking at that whole Boeing rally that it had, I'm thinking it got to nearly $200. I'm like,
it's crazy.
What's going to happen if they do, if there is some mergers and some consolidations? There's going to be excess capacity of airplanes. So
is there even going to be, obviously we saw that in the financial crisis out of necessity, but is it a necessity, where the government intervened, and in the case of the financial crisis, you were seeing banks, the government coming in and saying, look, we need help with Bear Stearns. We need help, with Wachovia. And they were kind of getting in and helping other banks to acquire to bail these things out. Do we really need, just throwing it out there, Spirit Airlines? Does the government need to come in and bail out Spirit Airlines? If we didn't have Spirit Airlines, is the flying going to be different? I don't know if I can answer that. So I'm just picking on you, Spirit. I'm not saying you're going bankrupt. We don't know, like Joel's saying, but we know is the airlines are burning a significant amount of cash. And if we don't get back to business as usual, within the next 6 to 8 weeks, these airlines are all in a world of trouble. So they're going to need some type of loan or something to get them through this tough time. If we get back to business as usual next month, then maybe some of these problems go away. But I think the only way we get back to business as usual next month is if we get a cure. So I'm scared of all the airlines.
Worth pointing out is Delta Airlines is probably the unofficial start of earnings season. They're always the first or among their first names to report. And that's going to be coming up here. I don't know if they've announced the date, but it's going to be, and if they have, I missed it. It could be this week. It could be next week. They're usually on a Thursday. So if they're not this Thursday, then they'll be next Thursday. So
there's not very much on the earnings agenda for this week. I was looking and I didn't see hardly anything.
All right, then there's a good chance it'll be next week then, because Delta Airlines kind of kicks off earnings season. So keep that on your radar here. It's not too far off.
But it's not good news that they didn't. When I saw the S&P futures up as much as they were, I thought, okay, well maybe these airlines are going to shrug off the Warren Buffett sells from Friday night. Delta is still down 6.5% here this morning. I mean, you got the S&P futures ripping higher, up 90 handles. And Delta is not really shrugging it off at all. It's up a little bit from the Warren low, but not shrugging it off much. Southwest Air, which actually caught an upgrade, I believe, today, which is helping a little bit, is still in the red as well. So with that being said, there's Delta's got a level. I mean, that $20 level in Delta is huge. So if you just want to trade just technicals and throw everything out the window, it could bounce at 20. It's possible.
Yeah, what was they beat it down overnight, 1990, I believe he got to. And then what was the low on the daily? The low on the daily was right there. 20. Yeah. Use that as a line on the
20
sand
is your line
for that.
On the sand.
I did notice which one was popping up. Love is popping up. And it's got a nice bounce off the low, and I was just looking in relation to Friday's activity, and Friday's low was the 2-day low was 30.87.
Big
So
level too.
yeah. On the downside, where'd
Yeah.
they smash it to? They
27.40. They smashed it after hours.
27.40, and then
But it wasn't like, it's not like you're trading like a day, where it's got a ton of volume down there. So I could see those lows potentially holding today. I mean, if they don't hold today, like we're up so much, 29.15. Again, I'm not putting any of my money in the airlines because I don't know what the bailout looks like. I think some of them are going to get a bailout, but I think it's going to be at really ugly terms, and there's going to be some serious dilution involved.
What about Zoom here? Bad news.
It got downgraded today.
Yeah, give us the bad news.
Well, the bad news is in relation to last week. So they are getting downgraded this morning by Credit Suisse to underperform. But the CEO was out, I believe, on Friday, just apologizing for this security vulnerability that their software had, this quote unquote Zoom bombing, where you can join a private meeting without being invited to it. So he was out in full force defending, really apologizing, saying they'll do better. But that's been the overhang here. And that apology was the result of Thursday's headlines that they're under investigation.
I mean, the under investigation thing has been what, hammered the stock 3 days ago, and it hasn't recovered since. Now you get a downgrade, but you also get an up market. Zoom is moving opposite to the market. It has been for a while. So it's got a negative correlation. If the market is down 80 points today, we probably are up or at least, flat on Zoom. The downgrade was going to hit it either way probably, but it wouldn't be down this much. So you have, a number of things slamming it, the market being higher because Zoom is obviously a play on that we're going to be in lockdown forever, and we're all going to have to go to Zoom video. And Credit Suisse downgrading it to sell. They don't like to hear those sell words. Underperform is their sell. So with that being said, at $100, I like this thing. I think it might get down there. Maybe it gives you a shot. I don't think it's going to give you that shot today, but maybe it gives you that shot in the next week or two. I don't think the Zoom trade is completely over here. Obviously, I don't think you're going to see the 160 high again for a long time, but I think there's still bounce potential at 100. I think I might actually try for a bounce at 100 if it gets down to low hundreds.
It all depends on if it gets down there quickly. I'm just looking at these dailies here, and it just seems to me it's going to trade 104 before it gets back over, what was the close from Friday? The close from Friday
128, way away.
Yeah, way up there. I mean, just look at Dennis. I know you gave that 100. There was a low at 100.88. But I just see 105, 107, 104.39, 104.16, 103.20, 102. So if I split all those numbers, it come out at 104. So if it got down there quickly, maybe a short-term trade, I don't know if it's going to trade there. I don't know if it's going to trade back up to 125 first or back down, but just a bunch of lows in that same area. So I'd look at it for a swing trade. If I was looking at it for like a longer term investment, man, oh man, I'd really have to let it come in. It's because it's had such a big move and it's turned, I mean, we've
the
seen
momentum's not on its side now.
Yeah. It's like the pot stocks and it's like the blockchain, they've turned. So now, everyone that bought it since the middle of March is still looking at a profit. But what happens if you lose $100? Then, some other people are underwater. So short term, if I wanted to risk $10 on a trade, in the stock 104, give it a 94 stop and maybe see it get back to, 128. But that's it. I love the platform. I mean, it's absolutely, how many different platforms have we been on?
I was going to say, speaking of Zoom, we are using it to connect with our guest
Great platform
today.
We're late.
It's okay.
Valuation's always been an issue.
Through Zoom, I will now bring on Jonathan Corpina, Senior Managing Partner at Meridian Equity Partners. We can't normally talk to Jonathan through Zoom because he's usually on the floor of the New York Stock Exchange, but alas, sign of the times. Jonathan, good morning.
Good morning, gentlemen. How are you?
Good. I want to know what it's been like for you working from home.
It's been quite interesting, right? I mean, we're normally talking to each other, over a phone call, and hold on,
Yeah.
start my video. There we go. We're normally talking over a phone call, and I'm down on the floor, and I've got my, trading systems in front of me, and in the room, giving you guys vibe and feel of what's going on ahead of the market opening. So now, with everything that's changed, across the globe, sitting in my home office now trading, certainly not as efficient as I am on the floor. I certainly don't have the same feelings that I get on the floor, right? I mean, we talk normally on Fridays a couple of times a month, and usually it's an expiration on those days. And we talk about, the volume, the sounds of the floor. You can hear, the market kind of moving in a certain direction, because you can hear the different crowds on the floor and the different people interacting with each other. So being home is clearly quite different. I just don't, I feel very disconnected to what's going on. But this, talking to clients, all my clients who are hedge funds, mutual funds, pension funds, larger institutions, they're all trading from home also, right? Everyone had their business continuity plans in place. You worked in an office building in New York City, and your business continuity put you in Jersey City or White Plains or somewhere in Long Island, all outside of New York City. All those options now cease to exist in this current environment. So everyone's working from home. So it seems like we're all kind of, working through this together.
So talk about, sorry, Dennis,
I want to ask, what's different? Like, how, are you still able to, like, it's got to be so much different, just the physicalness, but what is actually different about the mechanics of what you're doing? Like, not being down there, how is it different? Because, for me as a trader, I'm prop trader, I've been trading from home for a long time. We just use the electronic information coming at it. But obviously you as a trader on the floor, are going to get different information that's coming directly, sometimes human to human. How is it different? Like, what kind of information are you getting that's like, or that you're potentially missing now?
Yeah, great question, Dennis. So I'll kind of start off. For my firm, we trade for kind of three different types of clients. We've got our buy side clients, which are hedge funds, mutual funds, pension funds, like I mentioned before. We've got our sell side clients, which are broker to broker business, when we're brokering trades between other banks and other broker dealers. And then we've got our option business. So our buy side business and our option business stay the same. It's the same technology. It's the same working stations that we have to get that executed. It's our broker to broker business that we can't do from off the floor. That's the stuff that we have to do on the floor. So being off the floor, there's certain things that we are certainly missing at this point, right? So as a floor broker, besides being able to interact with other brokers and interact with the market makers and get information, get some insight as to stocks, some insight as to buyers and sellers. One thing that we're currently missing out on as a floor broker is the imbalance feeds, right? So as a floor broker, we get imbalance feeds starting at 2:00. And that information is very, very insightful, because the public gets it at 3:50.
Yeah.
So that gap in between, we're able to see the stocks update on an individual basis, and be able to put a kind of picture together as to what we see the imbalances are going to look like. So having access to that information early is certainly important, and something that our clients are missing. One other aspect that we're certainly missing that we can't do for all of our clients is the ability to interact with the close at a late time, right? So market on close orders, limit on close orders have to be in by 3:50. You can't cancel them. Once you're in, you're locked in. As a floor broker, we've got the ability to enter orders up until 3:59.50. Right. Yeah. And if there's an imbalance of, a non-regulatory published imbalance, we're able to interact with that. We can enter orders on the same side, on the contra side. We could change limit, change quantity. We can cancel very late. So it's that flexibility that floor brokers have. I'm certainly hearing from my clients that they're missing, that aspect of it, because as you guys are, trading from off the floor, and you guys know, once you put those MOC or LOC orders in, you are locked in. Yes. Having that flexibility towards the end of the day, because a lot can happen in that last 10 minutes, is certainly that they're missing out on.
I want to just expand on this, because this is something I've actually been tweeting about, Jonathan, is that I've been saying, people are saying, what's the moves at 350? And I'm like, we don't have any floor brokers down there at 350. So this imbalance information that's coming out is new to everyone. There's no feel coming out. So you were seeing some violent moves right at 350.00 when the public imbalance feed comes out. And this really goes to show you the benefit of having a floor, at least some floor traders still on the floor, because they dampen that volatility. You don't see these huge moves on a normal day, when we have floor brokers down there, because they've already they've already priced in to the stocks where they're going to be. But this is all new. It's like a new information just coming out, and nobody's, on the floor able to dampen that volatility. Like you were saying, you can't put in that order at 350, 50. So it becomes, just a liquidity issue as well. But there's some really significant moves happening at 350. And I know that's this one spot that I really notice a difference with not having the NYSE floor.
Yeah, and what I've noticed, and we're clearly keeping a close eye on it, and I'm able to pull down the same imbalance feeds that you guys are, and we're able to monitor it. But I'm seeing that the 350 published imbalances, dictate a one-way move, and that move stays that way. Where normally in a normal environment, when we're there, when an imbalance comes out, the public through a floor broker has the ability to interact with that. So you're right. We dampen that volatility. We add additional liquidity to the markets, and stocks don't get displaced. We're seeing both on the upside and the downside. Stocks are closing at really strange prices because of two reasons. Floor broker interaction is not there, and it's much harder for the DMMs, the market makers, to interact, right? So we go through the price discovery process at the end of the day. We're closing stocks. I can, as a broker, interact with that closing stock as a verbal interest late. The DMM, the market maker, is there, and he's saying, hey, look, this stock's closing down $1.20. You know what? I think that's a little bit displaced. He'd rather step up and buy it down 80 cents or 90 cents, offset some of that volatility in the market. The listed company's happy. The sellers are happy. He's able to get a better price for a closing price across the board. And everybody kind of comes out ahead on this. We're not seeing that interaction. The other thing that you're going to have to, we'll have this conversation hopefully very soon when the floor is back open. But when I, as a floor broker, put a late D order into the imbalance feed, it doesn't show up into the imbalance feed until 3:55, right? So you put a market on close order in at 2:30 in the afternoon, it'll show that 20,000. It'll show that 20,000 to buy when the imbalance feeds go out. If I put my order in, it doesn't hit the imbalance feed until 3:55. So what we see on a regular basis is two things: one, that 350 imbalance, and then that 355 published imbalance, because at that point, that's when the broker orders, the D orders, get pulled into the imbalance feed. And that also gives a pretty good indication of where things are going. You just don't see that interaction now.
Jonathan, just curious, what has been the hardest part of all this for you? What has been the hardest part of working from home?
I think it's the human interaction, right? I mean, I work in a room with 600 people, and I kind of call it the biggest lit pool that's out there, right? Because I'm interacting with traders within my own firm, but I'm also interacting with traders in many other firms, and interacting with the DMMs. And right. It's that intangible interaction, that intangible information, that I feel like I'm kind of losing my edge. And fortunately or unfortunately, the clients feel that too. They're looking for that extra layer of insight, that extra depth that I just feel I can't get a good handle on from off the floor. So from a trading point of view, I just feel like that lack of interaction, that lack of ability to extract information out of other liquidity providers on the floor, it has been difficult.
Have you been given any guidance as far as when the floor may be reopening?
Have had a lot of calls with management. No one is committing to anything at this time. I think the NYSE, has done a very good job, prior to us closing, to making sure that we were as safe as possible. And I think they're going to do that again moving forward. Having guidance from, the government, the president, they're clearly, talking with Mnuchin and all the politicians that have a say in this. I do know that the president wants to get this stock exchange open as fast as possible. We just have to make sure that we do it the right way and make sure that we keep everybody healthy.
Jonathan, so we talked a lot about market structure there and everything. I just wanted to get you feel for, the market here. We had that low in 2174. We had a great rebound. And it really felt like the bears were pressing late in the week last week, and to get us to that, 2,400, get us through that 50% retracement, get us back down to 2174. And the bulls dug in, And here we are. We got some good news today, and I kind of have my upper boundary here in the S&P at 2650. I mean, instead of everyone thinking, oh, we're going back to the lows or we're going back to 2800, do you see a prolonged period of consolidation here?
I do at this point, Joel. And I think I was listening to your show coming in, and you mentioned something that was so important. Trading on logic. And what's happening now, it's hard to kind of tie technicals into it and tie fundamentals into it, because we know earnings season coming up is going to be very bad. We know our economic data is going to be very bad. And that doesn't mean the market's going to react negatively to it, right? I mean, we've been trading for a long time, and it's the unknown that scares the market. The known news is okay. It's going to be priced in. It's going to be absorbed into our market. So we know the jobs numbers moving forward are going to be bad. We know earnings season is going to be bad. And I think people are going to be able to embrace that and be okay with that. So from that point of view, it's kind of hard. You gotta disconnect yourself. But when you go back to the logic, I think we've kind of had this week and next week on our calendars as far as the New York peak, so to speak, right? The numbers where New York really shows how bad it is, and we're able to get that turn. There is a sense we're getting those positive numbers in a little bit earlier than expected. I think that's what's going to be helping this market today. That could clearly change for tomorrow and later in the week. But yes, we got down to the lows. We've tested the lows. It seems like this market flushed out very fast and was willing to kind of rebound and build itself back up just as fast. We just need to get through. I really do think, getting past the jobs numbers last week was important. I think getting through this week as a whole is going to be important, because this should be the week that we get all the New York numbers to a point where they're going to be maxed out and we start to see a turn. And then from there, I think other states moving south, moving west, can kind of gauge themselves off of New York. And, unfortunately, there was no playbook for this, but it seems like, we've done a lot of things in New York right. We've done a few things wrong, and other states will be able to play off of that.
And one final question. Who signed that football back there?
That's that's a Joe Montana signed Super Bowl football up there.
Whoa. That he's stepping up the autograph game here on PreMarket Prep.
Yeah,
wow.
a couple of good stuff back there. It's a Dr. J. Here it is, Dr. J football over there. I've got a Lakers basketball sign there. So over the years, I'm a sports guy, and I just kind of collect things that stand out to me. I'm not a Lakers fan, but a signed ball was always interesting to me.
All right, Jonathan Corpina is a senior managing partner at Meridian Equity Partners. Jonathan, thanks for coming on, and stay safe now more than ever. And we'll talk to you again, hopefully, when you're back on the floor.
Gentlemen, thank you very much. All the best to you guys. Love working with you.
All right.
Thanks, Jonathan.
8:51 here. I want to pull up Wayfair. If you haven't seen this one this morning, you should look it up. Pull it up on your screen here. They couple things here. They announced a private placement of $535 million of convertible senior notes. Also, they expect to meet or exceed their previously issued sales guidance. This is net sales growth guidance of 15 to 17%. They see strong demand across their home goods categories. I read all that from Benzinga Pro just now. So Wayfair is flying.
Online retailer, and flew under the radar here.
Okay, so I suggested half seriously overstock a month ago, and you guys were like, "Nah, they do furniture." Well, I guess some online furniture retailer is getting through this nicely.
It's a nice move here. Wow, that's an impressive move.
I'd
probably move. At $80, I see that, and just trading it pure technically here. December lows were around $80 back in February. That's where you held support before we started to break down. I think that's back to the line in the sand. I know it's a long ways away from there. It's at 67. That's where I think you would run into massive resistance. These things it's going to be a crazy day for this. So it could really bounce around like you're talking a lot. I think it's easily see in the 70s. It could go right back down. I would not chase the rally, though. I'm not chasing the rally in anything. But online retailers, you could see this happen in this earnings season. If they got a very strong online business, you could actually see some of these kind of companies guide higher.
All right, pre-market high here comes in at 71.20. So as always, you want to see follow through that pre-market high. That be confirmation that the bulls are in charge today. My next level of interest, I mean, you got a daily high at 74, but just a 4-day range of highs from 74 to 76.43. That's just like, that tells me like 75 and a quarter. That would be, if you do plow through 71.20 and you're looking for a little bit meat on the bone there. If not, it opens up to that $82 level that Dennis mentioned. So got to get through the pre-market high first. Everyone wants to talk about LK. So let's talk about LK. What can you say about this stock? I mean,
I bought it. I played it. I bought it for a bounce play, and on Friday's action, I was like, this isn't bouncing. So I actually sold, I think it's 640 or something. I tried to get out on the opening print actually, because I had a bad feeling of it. I was just a little bit too high. It opened up over $7, but I was sitting in the mid sevens. And I had in my swing trading account, I didn't even get over to, because I'm doing my day trades. So I didn't even get over to it till like 9:40, because I was so busy with my opening trades on my day trading stuff. I came over to, and it was already starting to leak. I was like, this is not good. Not good that it's not bouncing back on the next day. So not what I wanted to see. So I took a loss on it and moved on. I think I sold 640. It's 538. I mean, this is just, it's a no touch for me at this point in time. I mean, you do have a level. 490 was the low from day one. That would be my line in the sand if you're trying to play it and you think that low could hold. I mean, I wouldn't argue, you can put on any trade as long as you have an out. So 551, if you're buying it here, you're risking yourself 60 cents on the downside. If it takes that out, I wouldn't want to be a part of it though. It's tough to buy companies that are, that are basically cooking the books. So I can't, come in here and, when I bought that, I thought I might get a bounce the first day, but this is not something that I'd want to just like, that I think is going to have to come back. It's not the case at all. When they're cooking the books, anything could happen.
Well, if you're buying this here, that you're thinking or you're hoping that the books weren't cooked as much as everyone thought it was.
That's exactly what you're thinking. You're hoping the books weren't cooked as much as everybody else thinks the books were cooked, but it sounds like they were cooked. I mean, they were issuing an apology.
They were in the oven. So
how long were they in the oven for? Were they in there just toasting the edges, or were they in there like, and it's well done? That's a funny thing to say.
Yeah. Is it on? Did you think you had it on Bake 350 and it's actually on broil?
I don't know.
It out. Greg is saying, I'm surprised Triple D would even try.
That was a boredom trade. That's one of those that if I watch a stock for long enough, I feel like I got to get down and dirty in it, right? So I use speculative cap. I literally use like 1/10 of my normal size of a position. So we're talking very small size.
Sign of the times. Dennis is trading stocks like
of my normal
coffee.
size. Not even half of my normal size. I use 1/10 of my normal size on that. And I thought we could get a bounce. And you know what? I was up. I was averaged in, I think, at like 680 from the day before, and it had closed there, and it actually opened up at $7. I was trying to get out at 750 for a little bounce, but then once it started getting down, I was like, nah, I don't want to be stuck in this thing. So I just took the loss and moved on.
All right, real quick.
Do you know why? Wait, real quick,
Yeah.
Spencer. Do you know why? And if anybody knows this in the chat, they get a free subscription to the Benzinga Pro.
Oh gosh.
Does anybody know why I call it Lucky Kitchen?
No, because of the
K?
No, nobody knows that.
Come
you
on.
can't be inside your mind, Joel.
Come on.
Yeah.
There
Lucky
used to be,
Kitchen.
Yeah.
Was there a stock called Lucky Kitchen that LK was?
Nope. There used to be a Chinese restaurant in Ann Arbor called Lucky
Oh my
Kitchen.
God, Joel. Come on. All right.
So
I thought someone would know
the only person that would know that is somebody from Ann Arbor.
Was anybody going to know?
Is anybody from Ann Arbor in the chat?
Oh my gosh. Real quick. CODX, Co-Diagnostics, they received the FDA emergency use authorization this morning for their coronavirus test. So CODX is up 31% or so this morning on that news.
And VIR getting a pop here too on coronavirus news, I believe, Spencer.
Right. Yes.
So we might as well just cover these together. GlaxoSmithKline and Vertex Biotechnology enter collaboration to find a coronavirus solution. GlaxoSmithKline is going to make a $250 million investment into VIR. Both of these coronavirus stock plays are getting a lift here this morning. I feel like the plays on these stocks is kind of like, it's like when we were early, they had the sky was the limit, but now, people have been stuck in these things now. So it means there's overhead supply all of a sudden on all of these. So I don't know, like if, VIR, I think it's more of a gift, both of these rallies, in my opinion.
I think
Be more of a seller than a buyer.
Let's go to a real stock. If you want to do this and you're looking at the play, let's just talk Gilead. I mean, that's a real stock and it's trading up. So let's.
Well, it's a company that's got viable operations that isn't just dependent on, a hope trade that we might come up with a coronavirus cure.
There you go.
So, what do you think of Gilead? $80.
Yeah, Spencer, you want to give the news on them?
Is there more news again today?
They're increasing their production for their coronavirus drug, although they're not charging for the supply. But yeah, I take a little bit of offense to Joel saying real company. I mean, these other ones are real companies.
They're real companies. They're just not one-trick ponies.
Right.
These other companies are pure. Their trick is coronavirus. Gilead is a company with, it isn't just dependent on coronavirus. Yeah. It's a stock that I wanted for a while. I actually bought it and then I got spooked out. I didn't want to own anything back in the middle of March. So I wish I would have held it. I wish I was in. I'd be a buyer of pullbacks. I'm not chasing it though.
It's holding up here. This is kind of interesting. You got the initial pop. It's getting a little market love too. It got up to 80, 88. And they've tried to bust it back down, but it's just, is there some icebergs out there or something, Dennis? What's going on? What are you seeing on the bid and offer? Because it's tight here. So I would say if it holds.
80 looks kind of thick right now.
Yeah. Thick is it offered?
Yeah, it's offered. Yeah.
Okay. If you're looking for another target, like let's say it goes to 80 and 80 and a quarter, 80 and a half, and you're thinking, oh, this is going 180, 160. That would be my next target. That's your March 20th high. But in the event, like you get up into the mid 80 handle and then you roll over and you come back down through 80, I don't know. I would look at least for a gap fill at 79.47. And I don't think you'll get it unless the market really rolls over today. I don't think you'll get it unchanged at 78.21. But
Gilead, you could get unchanged at 78.21. I'll tell you why. It's been trading opposite the market a little bit. I've been trading it just in the stat arb category right now, and Gilead's actually been moving a little bit opposite to the market. So I would not be surprised if this thing went red today.
Okay.
Because the market's up higher. And they're playing, the coronavirus play side. I mean, that's not going to last on Gilead forever. But again, Gilead's beta is lower too, so it's never usually going to be up as much as the market. Also, headlines are going to drive it. If they get a positive headline coming again, that could drive it higher too. But I would think I'd be more inclined to sell it today, just for the day traders out there, than think this is going to catch up to the market, because usually this one has been moving opposite to the market to a certain extent, like not perfectly, but a little bit. And you know what other stock, just before we finish the show, stock I think could actually get hammered here. I look at Zoom, and I've been pair trading these two together, Teladoc. And Teladoc is holding on here. I think Teladoc is set up to, maybe pull, not that it's going to pull the Zoom because they're not under investigation or anything like that.
It's down today. It's one of the only ones.
It's hanging on a cliff here. And I would not be surprised if Teladoc starts to give some back. If the market starts to rally significantly, TDOC is probably going to go down. So this moves opposite to the market too. Not surprised that it's down here today. I don't know if I want to sell in the whole. I have no position. I don't know if I want to sell in the whole $4, but if it's to rally up a little bit here, I would be inclined to actually short this. So I think the TDOC, I know it's got a nice little flag. You're looking at it there. It's tightening up. I think it's going to break to the downside. So I'm bearish TDOC. That's a call I'm making. No position on it yet.
All right, that'll be it for our show. As some astute viewers in the chat noticed, yes, I didn't have a new sign today. I apologize.
What the hell?
I'll be honest, I kind of forgot.
What?
It was a long weekend. What can I say? So
I should put up signs, and I got them on my thing here, going all around here.
I'll get a new sign up for tomorrow. My sign maker is over here right next to me right now. So I will have her make something up for us tomorrow. I want to thank our guest today, Jonathan Corpina. Thanks to all of you in our chats, both on YouTube and premarket.benzinga.com. Catch the podcast as always, or a replay of the show on our YouTube channel. That's youtube.com/Benzinga TV. Please remember, all the information from our show is meant to be used as informational purposes only, not for investing or trading advice. You can catch a free 2-week trial and a subsequent discount of Benzinga Pro. It's our real-time news platform by clicking on the description or the link in the description of this video. Everyone, have a great rest of your day. Be safe out there. Joel and I will be back with you at 3:40 for what we've been doing at the close, and the whole crew will be back tomorrow morning. Have a good one.